A definite scare running through local markets too today. Earlier I spoke to Marcus Padley at Patersons Securities. Marcus Padley, a panic on the markets following that other explosion in a nuclear reactor. Is that how you were seeing it?
Yes, Tiki, the market was down 147, I think at its worst, closed down 97, and that was as the Japanese market fell 6.5%. I think circuit breakers kicked in, and then when they came off, it was down 13.8% at worst. And there's talk about, a nuclear cloud over Tokyo and all that sort of stuff. Pretty panicky stuff. The market is now down 8.4% from the top in less than a month ago. It was up 18.4% since May last year. I think there's just 18 stocks in the ASX 200 that have gone up in the last month. I was thinking when I had a look that the damage would all be in resources because the banks seem to have held up quite well, but it's not really. It's across the board. The banks have fallen as much as BHP and Rio.
Again, it was the locally listed uranium stocks that were at the forefront of selling. Can you go through them for us?
Yes, there are only two real producers or project developers, Extract Resources and Paladin. Those are both off 39% and 35% since the top of the market. It's the rest of them are mostly explorers, and some of them are down 52%, 42%. They've been hit harder because there's a point at which a uranium project a lot of which is based on or founded on hope and the best expectations for nuclear power, and of course they've taken an absolute hit. And if a project loses that sort of foundation belief in nuclear power, it becomes worth zero, and judging from some of the share prices, that's what people are thinking. So and then there are explorers that have got money and explorers that haven't got money. Those without money are getting absolutely smashed. So yes, uranium sector taking a huge hit.
A slight rally at the end of the session. Is this a buying opportunity?
Look, Tiki, it is classic stockbroker speak to talk about value appearing in the market. But I'd question any value investor who's going to pick up a stock that's fallen over. How do you value a uranium stock? How do you value a commodity or resources stock when you don't know what the commodity price is going to be next year? And I think the real fear of this movement is that it is yet another catalyst on top of Libya, Europe, that people have been looking for to sell the market. The US has still got a credibility problem. They've got their quantitative easing coming off in June. The feeling is that's been a massive support for not just bond, but equity markets as well. And the question is, what are they going to do from here on? Well,
their Open Markets Committee, the Federal Reserve's policy setters, meet overnight, don't they? Do you think they'll have Japan very high in mind?
Look, they weren't going to be doing anything on interest rates, but their real decision is whether to extend their quantitative easing, and this has got to be another factor which suggests that they will have to, because the quantitative easing is only there so that they can get the economic recovery to be self-sustaining, to use their words, and there is just it's looking like less and less chance that that'll be the case come June, in which case they'll have to put quantitative easing in again. It's interesting that PIMCO fund manager, the biggest bond fund manager in the world, has sold all government bonds in the US, presumably because he recognises that after June there may not be another buyer for bonds out there. The government was the only one, so I think they're going to have to extend it if this is the market background.
Marcus Padley, thanks for talking again to Late Line Business.
My pleasure, Tiki.